Taming the High Cost of College, episode 118.
You have kids, they grow up, and before you know it, it's time to plan for college.
Where do you start?
How much is it going to cost?
Will you qualify for financial aid?
Should you be looking into scholarships?
When will you be able to retire?
What about student loans?
The list of questions is never ending. The good news is, all the answers are right here. Welcome to the Taming the High Cost of College podcast. Here is your host, certified financial planner, Brad Baldridge.
Hello and welcome to Taming the High Cost of College. I'm your host, Brad Baldridge. Today we have a great interview with Cody. He is an author as well as a tax expert. We're going to talk today about using some of the tax benefits that are available to parents that are paying for college and how to essentially get the most you can from, again, doing good tax planning. We'll also talk about how business owners might be able to use their business income and get some tax advantages while paying for college as well. So that's a great interview. Before we jump into that, we also have Brad Recommends, where I'm going to talk about scholarships and using the military. So let's go ahead and jump into Brad Recommends.
The latest tips, tricks, and tools you can use today. This is Brad Recommends on Taming the High Cost of College.
Today on Brad Recommends, I'm going to talk about scholarships as one of the core areas that all people or all families should be working on. If you want to learn more about the 20 core areas, again, you can go to Taming the High Cost of College /core, and that's where the article is that has all 20 of the areas that all families need to work on. But today we're going to focus on scholarships. So all families need to work on scholarships, at least to the point where they decide whether or not they're going to work on scholarships. In other words, a lot of families talk about scholarships, but few families actually pursue scholarships and ultimately win scholarships. And that's because scholarships is a new learning curve for a lot of families. So what I encourage families to do is early on, and when I say early, it could be as early as sophomore or junior year of high school, you need to start figuring out how scholarships work and whether or not you're going to pursue scholarships. So scholarships come in two broad varieties. The first variety comes directly from the college you're attending. So if you're going to attend, Boston University and they offer scholarships, you certainly want to pursue those types of scholarships. Now there's also what I would call private scholarships, or scholarships that come from outside companies or other sources other than the actual colleges. So those would be large companies like Coca-Cola and Kohl's and Target, and local organizations like the local Rotaries and the local clubs and local businesses, state and regional organizations and fraternities and professional organizations. There's all kinds of different ways that you can find scholarships, all the way from the local city and county all the way up to national or even international scholarships. Now, it's important to realize that scholarships are a lot of work, and some families are not going to be that successful with scholarships, and they would have been better off to just skip scholarships altogether. Other families, it's a great opportunity, and again, I often talk about some of the families I've worked with. I had one family where they applied to about 40 scholarships. They won 7 for a total value of $39,000. And of course, I've interviewed a few authors that have done fantastically well in winning a whole bunch of scholarships. So you can go back and listen to a number of podcasts where we talk about scholarships. But the key point that I'm trying to make is you need to decide if you're going to do scholarships, you need to put that into your plan and start budgeting the time. If you're going to fill out 40 scholarship applications, or more specifically, if your student's going to fill out 40 scholarship applications, first you have to find 40 scholarships that he's qualified for. Then you have to do all the application process, and it's a lot of work. And where I've seen success, mom and dad are actively involved in the scholarship process. It's not just mom or dad saying, "Hey, little Johnny, why don't you go get a bunch of scholarships and help pay for college?" That generally doesn't work. Where I've seen it work, mom and dad are part of the process, and maybe they sit down on Sunday nights and help their student. Or at least they have regular time where they help search, they help keep organized, they're part of the motivation, they're there to bounce ideas off of, they're there to proofread and organize perhaps. So if you're that family that's going to fill out a whole bunch of scholarship applications, that's great, and go ahead and get going and do that, but remember you need to start early. On the other end of the spectrum, there's a number of families where you have a hard time finding scholarships. Again, if your student is relatively average, I always use the example. I have parents come to me all the time and they say, well, my kid, plays some basketball and football. They do okay. And they're also involved in a couple clubs, but they're not really in leadership positions. And we're looking for scholarships and we can't really find any. And the challenge, of course, is for the kids that just, participate on a basic level. There are scholarships for those kids. Unfortunately, there's also a lot of kids that are qualified for those same scholarships. So it's hard to win them when everything you do, a lot of other people do. So if your student is a great communicator, has strong grades, has a unique talent, or is very deeply involved in a particular area, they're a better candidate for scholarships. And then you may want to focus on those areas and then move on. So again, when it comes to scholarships, start early, figure out what your opportunities are, and then make a decision. Are you going to be doing large numbers of scholarships, and then you need to learn the process? Maybe you buy a book, maybe you get involved in other programs, or maybe you're not going to do any scholarships at all. Maybe your time is better spent doing tax planning or earning additional funds. A student that can work for $15 an hour doing something might be better off actually working versus spending time on scholarships where they're not likely to win. Now, obviously, you can also do both. And then the final decision you could make is, well, we're not going to do a whole bunch of scholarships. Let's just find the 2 or 3 or 5 that we're really going to qualify for. Or after doing some work, spending an hour or 2 or 3, and you're saying, okay, scholarships does not seem like a good pursuit for us. Let's go ahead and write it off and move on. So I think you need to decide a whole bunch of scholarships, just a handful of scholarships we're very qualified for, or no scholarships at all. And again, when I'm talking about these types of scholarships, this is all in the private realm. Everybody should look for scholarships at the colleges you're considering, because again, those are much more prevalent and you're much more likely to win some, especially at the private schools. All right, so that is something that everybody needs to work on, at least to a point. You may decide that what your scholarship plan is to do nothing. And if you want to learn more about it, you can go to Taming the High Cost of College /scholarships. I have the scholarship guide for busy parents. It's a great resource that will get you started and help you determine, where to find scholarships, how all this works, examples of searching, examples of evaluating, and kind of get you up to speed on the different types of scholarships so that you can come away with a plan. Now, the scholarship guide is 4 videos. Each video is about 10 minutes long. So it's not a huge commitment, and it'll get you started, and then you can decide if you're going to continue and work on scholarships from there or just write it off. Now, the optional area I want to talk about is getting involved in the military to help pay for college. And there's really 3 or 4 different ways that the military can be part of the college process. So the first one is ROTC, where you can get involved in ROTC, and that will help pay for college while you're attending college, perhaps, and you take ROTC courses in some instances. And that's a great opportunity. It stands for Reserve Officer Training Corps. And again, it's a great opportunity for the right kids that want to pursue that. There's also the GI Bill. And the GI Bill may also pay for college after the student has served in the military. Or in some cases, that GI Bill is transferable from a parent that has served in the military. So if you have a military career, you may be able to transfer your GI Bill to your student. Now that generally is a tool that the military uses for career military personnel, and generally it's offered, after a 4 or 6 year stint to have some of their core key people re-op and stay in the military for another tour or another round. And again, I don't know much about the military, so I may not be using quite the right words. Then we also have the military academies. Again, for the students that are a good fit for the military academies, that's another great opportunity to get a great education. And military academies are free as far as there's no tuition or anything. Instead, you have to commit to a certain number of years of service once you graduate and remain in the military to kind of pay off your education. Now, once you've served the required amount of time, then you're free to go on and do other things as well. So I've got a number of great podcasts out there around military service. So number 46 is benefits of the GI Bill. Number 42 is ROTC scholarships. And episode 101 is a great interview with Rob Aschenbach, where we talk about all the different military service options and a little bit of a day in the life of what it's like to actually be in the military and use the military as a way to grow your career and what opportunities it has. Rob is actually just recently separated from the military, and his wife is still in as a career military person. All right, so that's the Brad Recommends. Let's go ahead and jump into the interview. Today I'm sitting down with Cody. He is the author of Secrets of a Tax-Free Life and also a certified tax coach out in New York. Welcome, Craig.
Thank you very much for having me here today.
All right, well, before we jump into the exciting topics of taxes and college, why don't you tell us a little bit about what you do and how you came to do it?
I'm a CPA. I have my own accounting firm in New York. It's a second career for me. My first career, I spent 17 years with the New York City Police Department. I retired as a lieutenant. And when I retired, I went to work for a public accounting firm. I received my CPA license, did that for a number of years. And then about 10 years ago, I struck out on my own and started to build a business. We had 2007, 2008 come around, and it really put a hurting on us. And we kind of decided we were going to retool. And we retooled as a CPA firm that specialized in tax planning, and that's where the certified tax coach comes in. And basically, as a certified tax coach, we help our clients keep more of what they make by lowering their tax liability through legal means. My first book, I co-authored Secrets of a Tax-Free Life, was an Amazon bestseller. And I recently released my second book, which is 10 Most Expensive Tax Mistakes That Cost Business Owners Thousands.
Wow. Okay. So you got a lot of good information out there. And I think you hit on a chord that I just want to stress for people is, what's the difference between having a guy fill out your taxes and tax planning?
Well, the big difference is most accountants, CPAs, enrolled agents are very good at putting the right numbers in the right boxes. But what we do is we look for legal means where you can take advantage of the different issues or areas of the tax code. So as opposed to putting the right numbers in the right boxes, we look for ways where you can keep more of what you make.
Right.
Through proactive planning. And it comes down to communicating.
Absolutely. And I think there's a parallel in financial aid as well, is you can fill out the forms properly, but what you really want to do is plan your life so that when you fill out the forms properly, you get a better answer. You can do that for financial aid, and obviously you can do that for taxes as well.
Most definitely you can do that.
There's an intersection, I think, between college and taxes. Obviously, you have to, as an example, you use your tax forms to fill out financial aid forms and all that type of thing. So let's start with the basics. There's 2 or 3 credits out there or tax benefits that people get when they start paying for college. Let's talk about those for a minute. What are the top ones that you see?
Oh, well, there's the lifetime learning credit, and then there's the, what is the correct name of it? The education credit. I'm sorry, the exact name is escaping me. Help me out on that one.
I think it's the new opportunity credit.
Yes, the opportunity credit was changed a few years ago. That's up to $2,500 a year. So those are the 2 big ones. And what we see a lot of times with those credits where people have children in school is that sometimes they've made too much money, so the credit is actually phased out or they miss out on it entirely. And, like you said earlier, people fail to plan for college. And the biggest mistake we see people making is they fail to plan for taxes. And planning, as you said before, can save them, some serious money.
Yeah, so let's get into a little bit of the specifics. So the phase out for that credit that we just talked about is between $160 and $180 if you're married, and $80 and $90 if you're single. And if you file as a separate, you get clobbered altogether, so don't even do that. But as an example, I had a family where they were earning $182,000 on their AGI, which was a little over the limit. We were able to put more money in their retirement plan. They had 2 kids in college, so that created a $5,000 tax break plus their normal savings. Now,
oh yeah, That's tremendous. People don't realize why some, like I said, the biggest mistake we see is people fail to plan, and a simple plan like that, they turns into dollars in their pocket.
Absolutely. And then, of course, the catch-22 of it all was, well, if they put all that money in retirement, then they were using up their college money. So then we were able to take a loan on their retirement and put it back into the college bucket and spend it on college anyway. That, of course, doesn't work for everyone, but if that's where I think most accountants and non-planners would say, I'm sorry, you don't get the credit, instead of saying, and by the way, we should do something different so that you can get the credit. And that's the next step. And that's something that you typically would do, correct?
Oh, yes, definitely. We're very proactive. We work with business owners, and, we're always looking for ways, to lower the tax liability, which in your world, in the tax planning world, the college planning world, means more dollars in aid or more dollars in credits.
Right, exactly. Well, I guess let's talk a little bit more about that. And on many of my other shows, we've talked about how financial aid works. And in general, financial aid is based on your income, which comes from your taxes. So obviously, your accountant or CPA is involved in that. And it also comes from your assets. And especially if you're a business owner or a rental property owner, you've got assets to deal with as well. So what have you seen as far as some strategies for business owners that are trying to lower their income so that they might qualify for more aid?
Every strategy that we use can be a strategy, that will help them qualify for aid because it reduces their income. But so we have clients where we use a medical expense reimbursement plan that allows them to write off their medical expenses, such as their braces, that are normally they're deductible, but people don't get the benefit of deduction. So if you have a kid that's getting braces, and now all of a sudden you could write that off. Maybe you have a high school student or two that is going to a private school, and we could, show you how to, pay your child legally, reduce your income, and the child doesn't make enough to be taxable, and you pay the tuition from the child's account. So those are, rather routine things that we see business owners use.
Right.
And those are probably more on a smaller side, but those are interesting things. Another thing we have clients will do is they'll have multiple businesses maybe, or multiple streams of income, and they'll set up a management company, and they could move money into this management company that's providing services and thus lower their AGI on their personal returns, which can be very fruitful when it comes to aid.
Right. And again, here's a question for you that I see come up quite often, and I don't know if there's a solution for it, but since you're the expert, I'll ask you. And I can't remember I think it's Schedule S or S Corp, I guess is what I'm trying to say, where there's some businesses where the business income flows through to your personal return. So it's not unusual for me to see, a family have, $200,000 or $300,000 of income because of their Schedule S, but in the end, a lot of that doesn't really end up in their pocket. It just shows up on their tax forms because that's the way they're structured. Are there things that they can do to fix that if they're worried about things like financial aid?
Well, there are definitely planning techniques that you can do, to lower that number. I'm not sure, to make a $300,000 number go away where they need the money, probably not. But there are definitely legal ways to reduce that, and most people. Yeah, the K1 number isn't typically that high, and we can work with them, or people that do what I do can work with them to legally reduce that number.
Right.
Through expenses that they're currently already paying, but maybe haven't been quite documented in the correct manner.
Right. Well, what about switching? If you switched to a C Corp or did that type of thing, and again, I don't know what that costs, but
Right.
Would that work? And then if you did that, what I'm always telling people is, well, yeah, you can do things that'll make it better, but the cost of doing that often is prohibitive. The benefit, you say, I do all this work, the benefit is I get a student loan that's slightly better. It's not worth spending thousands to restructure my business in order to get a better student loan. So is that something that you see where that theoretically it works, but then in practice, by the time you factor in costs and that kind of thing, it's a painful process?
If you're using a C corporation, that corporation pays its own tax, and then in order to get the money out, you have to be taxed on it again. So it's typically not something that would be recommended for that kind of money. There are ways to do it where we do it where it's a smaller amount of money and it's not greatly affecting them, and they're getting the benefit of the lower tax rate inside the C corporation on the first $50,000 of net income. So it works there. Up and above that, it really doesn't work, and it also depends on the person's situation as far as what they need that money for. Are they using that money for other investments? Are they using that money to live on? That's what it comes down to. And, these things can all change in the next few months if the tax code changes, and as they talk about making the top rate 15% on a C corporation, then it could be a strategy that might work a little bit better.
Right, absolutely. So I guess the bottom line is it's complicated, and you really need to work with both someone that understands the college side and someone that understands the tax side.
Yes, and I'm a big proponent of communication, whether it's the attorney and the CPA, or the college planner and the CPA, and the financial advisor and the CPA. The more everybody knows, the more everybody communicates, the better off the client is. And if you don't communicate, you're really operating in a vacuum, and then you don't know what works for the college planning side.
Absolutely. And again, just to put it in a little bit of context, as I'm working with business owners, will often say, in a particular situation, for every dollar that we can get off of your AGI, we're going to get 20 cents of scholarship from this particular school. Now, that's not always the case. It has to be the right school, the right student, the kind of the right situation. So sometimes it's really great if you can bring your income down, and it's worth working with your, tax guys or business plan or whatever to make that happen. But on the flip side of that, often doing all the work, there's very little payoff on the college side. So yes, you can bring your income down, and now your financial aid forms look better. But just because they look better doesn't mean you necessarily get something of benefit. Again, you might get a better loan, and there's a lot of families out there that say, we're not taking loans. So even if it's a better loan, it's not really a benefit because we're not going to take it.
Right. And then one of the benefits of tax planning, though, in that case, where maybe it doesn't help so much on the college side, but our average client saves about $20,000 a year in taxes. So if it doesn't help a whole lot on the college planning side, it frees up money because their taxes are reduced for funding of the college.
Right. And I think that's an important thing to realize is that's where we can go next, which is just overall savings on taxes is a great way to pay for college. And I see that with business owners and rental property owners. So let's circle back around and talk a little bit more about hiring the kids either in a business or, again, if you have rental property, you could hire the kids to mow the lawn and do some things like that.
That's a strategy. That's a very viable strategy. There's court cases on it that say you can hire your children as young as 7 years old. I typically like, to use children that are at least 11 years old. And you need to make sure everything is documented. And, when they come into work, they sign in, you keep good records. It's all about good records. And then you pay them. The money goes into their bank account, and then the tuition comes out of there. It's also useful when you have somebody that's really not a dependent. They're not going to be a dependent anymore. And maybe your income is too high that you won't qualify for the opportunity credit. Now the child, files their own tax return. They have their own income. They qualify for the opportunity credit that you would not have received. And you've lowered your tax bill because you've paid them for services that they provided you. So it's a real win-win there when you add in the education opportunity credits.
So let's assume that I'm your client. I happen to have 3 duplexes around town, and I've decided, hey, I like that strategy. I'm going to hire little Johnny. Little Johnny is always my child. It's what kind of long story, but anyway, so little Johnny's going to go mow lawns, and I'm going to pay him, $50,000 a year to mow those lawns. That's ridiculous, right?
Correct. Yeah, that's looking for a problem.
Exactly. So but where is the line? What is fair? How do you come up with what is quote unquote reasonable?
Think of it as an arm's length. What is the market? What is the market for that service? And
Okay.
based on what that market is, use that. So you're not going to, pay, a 7-year-old $50 an hour to lick stamps. The same thing is you're not going to pay a 20-year-old, $100 an hour to mow the lawn unless he's very good. Maybe he's an agriculture student. Maybe he's got special qualifications. But it has to be reasonable compensation, because once you get outside of reasonable compensation, you're setting yourself up for a problem. But what people fail to really realize is the biggest thing is failing to plan. If you plan, you can figure out legal ways to do what you're looking to do.
Mm-hmm.
Other jobs that person can do and generate the income. And, there's also an education assistance plan that you can use. And if it's a relative that you're talking about and they file their own tax return and you don't claim them as a dependent and they're over 21, you could pay them $5,250 a year. That's tax-free.
Right. It's tax-free to the student, and it's tax-deductible to the business, so it's kind of the best of all worlds.
Yep.
So getting back to my mowing the lawn, so would you sign off on this idea? I went and I called a couple lawn care companies, and they gave me a quote that said every time they come out to mow the lawn, that it's going to be $75. It's kind of the average quote I got, so I'm going to pay my kid $75 to do the same thing. Whether it takes him an hour or it takes him 6 hours. I could just say that's fair because that's what my quotes say. And
correct. And as long as we have documents that support that quote, because, if the IRS came and they questioned it, well, this person told me this number, that doesn't mean anything. You need to have something on paper that says, yeah, this is what they would have charged me. This is my invoice that they would have given me, or this is their estimate.
This is the invoice that I had been getting until I fired them and hired my kid.
Correct. And then you show that money going into your child's bank account because it has to be paid to them legally. And if it's real estate and it's in a single member LLC, it's taxed as a Schedule C. That money that you pay that child, if he's under 21, is not subject to self-employment tax, which is another 15% savings.
Right. So I guess here's another, in the real world kind of question. I have a lot of business owners that I'm working with that they work completely by themselves. So they've never had employees, and then, and they don't technically want employees per se. But now we're looking at college planning and saying, well, maybe I should hire my student as a way to save some money. So obviously, if you're running a business where you already have employees and adding your student to the payroll, there's probably a very small incremental cost. But can you give me an idea of what you might need to look out for if you're new to this and saying, I've never had an employee before. My first employee is going to be my high school kid. I'm going to pay him to do filing in my business or helping me with advertising. What's the next step? How do you set up payroll, or what do you do, or what's your recommendation there?
So once again, if he's under 21 and if you're not using a payroll service or doing payroll yourself, that means you're probably a sole proprietor filing a Schedule C, or maybe a single member LLC, or a partnership, but more than likely single member LLC. You would not have to use a payroll service either, because that is one of the instances where the child, if he is under 21, his income is not subject to self-employment tax.
Okay.
So you would just actually have to cut the checks. That would be the extent of it, cutting the checks and make sure they get deposited into his bank account.
Right. So set up a checking account for the student, come up with your fair wage, set up some sort of timesheet that documents a little bit about what he did, why he did it, how many hours it took, and if you're paying him hourly or project work or however you want to set that up. And it seems relatively simple then. And then obviously you want to run it past your accountant or bookkeeper or whoever's helping you, right?
Right. Obviously you want to make sure you're doing it the correct way, because if you miss the little step, then you're not doing it right and you could have a problem. So, these are things that, consult with your advisor to make sure you're getting it correctly. And hopefully your advisor will take the time and explain it to you and you get it correct.
Right. Or, and I guess that's the other side of it, is if you just really don't want to deal with it. I use a payroll service. It's the best $50 a month I've ever spent, because I really don't want to deal with it. Now, I do have a couple other employees, so I'm just tacking my kids on. But again, they keep track of things and print reports and do all kinds of good stuff that I don't want to have to deal with. So that's another option, I guess.
Right, depending on what type of entity you have. And what we've found is, just as to go off on a little bit of a tangent, is the second biggest mistake we see people make, besides failing to plan, is having the wrong entity choice. So their entity, maybe if they make a change in their entity, it can actually make all these things a little bit easier and save them some tax dollars at the same time.
Right, absolutely. All right, so that's one area that people certainly can work in and try and work on lowering their income and their taxes. But I think another key area for people to realize is tax planning can generate cash flow that you didn't have before that can be redirected into college. So another area that I work a lot in is investing in 529s and doing that type of stuff so that you get some tax deferred growth and perhaps some tax-free growth if you spend it on college. Do you find that in working with families that incorporating some of those plans as well? I mean, I'm trying to remember, does New York offer a state tax deduction?
New York offers the state tax deduction, yes, if you use the New York plan.
Right. And then there's also the New York City. You get a little more leverage there too. Is that true?
I don't know about New York City. I've never seen that in New York City.
Okay.
You still get it still reduces your New York City income.
Right, exactly.
It's
so
not a separate plan. Yes.
It's not a separate
you could
plan,
say,
right? But
it's just the New York State plan, and it reduces your state and city income. Yeah.
Right. But, and again, I don't know what the marginal rates are if you're paying state tax and New York City tax, but as I recall, it's approaching 10 or 12% or something, isn't it?
Yes, it is. Yes, it is.
So that can add up. There's a big myth out there that I have a lot of people that I run into say things like, well, it's too late to use a 529 because I have a kid in high school or I have a kid already in college. And I want to debunk that myth. It's never too late as long as you're going to have college expenses. Now, would it have been better to invest when you had a 2-year-old? Absolutely, because then we'd have gotten the growth for a lot longer. But just because you're at 17 and it may be time to start, you really got to run the numbers. So do you help families kind of figure out, again, how the 529 works and as far as making sure that it shows up on the tax forms in the right way?
Oh, yes. That's, we'll either get the question or we'll present the question to the client. But most of our clients typically are aware of the 529 plans. They're just not aware of how much they can put into it or who can put money into it. So they'll make the contribution, and when it comes time for college, they'll get the distribution numbers, and we'll put that into the tax returns. And usually they'll see how much of that money was actually growth versus their principal, and they're very happy.
Okay, so I guess tell us a little bit more. You have 2 books out there, and the first one was A Tax-Free Life, and what was the name of the second one again?
The second one was 10 Most Expensive Tax Mistakes That Cost Business Owners Thousands. And we're going to offer your listeners a free copy of that book if they go to our webpage, which you'll have on your show notes, craigcodyandcompany.com/college, and they can request a free copy of that book.
All right. Well, great. I'll put you on the spot a little bit. Can you tease us with a couple of the ideas that might be in that book?
Oh, yeah. Well, I mean, one is basically failing to plan. The other is choosing the wrong business entity. One which we've talked about is missing family employment, missing medical benefit plans, the home office, the retirement plan, and, once again, missing my help.
There you go. So there's a lot of things in there. So there's actually a little more detail, I would assume, on each of those topics. So if people are intrigued by some of the things that we've just talked about, you certainly can download that copy of the book at his website. And again, all the links will be in the show notes of this episode on my website as well. So you should be able to get out there and get it.
Yes, it's actually going to be, an actually bound copy of the book that we mail out to you.
All right. And then is there anywhere else where people might want to plug in? Are you social media, websites, anything else?
We're on, our website is www.craigcodyandcompany.com. We have a blog and a media page and social media. Our Twitter handle is CraigC2742. And our email is craig@ccodycpa.com. All that stuff will be in your show notes, and if anyone has any questions, they can feel free to reach out to us.
All right, so bottom line, taxes can make a big difference in your college planning, and they can make a big difference even if you're not sending kids to college. So, and again, a lot of people are thinking, well, geez, I don't want to deal with taxes, and that's why Craig's around. All right, I appreciate the great information, Craig. Let's stay in touch.
Thank you very much for having me.
All right, that was a great interview with Craig. Hopefully you learned a ton, and if you feel like Craig would be a good source of information, I encourage you to go to his website and look him up. Again, he's providing some great value there on his specific page. As always, we appreciate it if you have any questions or concerns to give us a call, send us an email, whatever you might want to do. All the contact information is available at our website at tamingthehighcostofcollege.com. And there's also some great resources, such as the scholarship guide that we mentioned earlier. So go ahead and go visit tamingthehighcostofcollege.com. I really appreciate you listening. If you could leave us a comment or a review in iTunes, that's also greatly appreciated. That's all we have for today, and we'll see you next week.
Thank you for listening to the Taming the High Cost of College podcast. Now it's time for you to take action. Head to tamingthehighcostofcollege.com for show notes, bonus content, and to leave feedback for Brad. The next step on your college journey starts now.
Brad Baldridge is a registered representative of Cambridge Investment Research and an investment advisor representative of Cambridge Investment Research Advisors, a registered investment advisor. Securities are offered through Cambridge Investment Research Incorporated, a broker-dealer and member of FINRA and SIPC. Brad owns two companies, Baldridge Wealth Management and Baldridge College Solutions. The Baldridge companies are not affiliated with Cambridge Investment Research.